Woolworths shares crash. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article which is discussing Woolies shares crashing. I noticed the other day that they've taken a bit of a shave, which I thought was quite surprising considering, well, shouldn't they be doing gangbusters now with all the lockdowns and the massive toilet paper sales? Anyway, let's have a look at this. Woolies bloodbath with a $4.5 billion nosedive. Supermarket giant Woolworths has been obliterated on the Australian share market this morning after revealing a worrying blowout. Shareholders were savaging supermarket giant Woolworths on Tuesday after the company slashed its earnings forecast on a $220 million COVID cost blowout and softer post-lockdown sales. The company's ASX-listed shares took a $4.5 billion dive within 30 minutes of trade and were near their lowest in 6 months after it admitted to investors that the coronavirus had wreaked havoc on its supply chain. Compounding Woolies' woes was supermarket sales easing during the second quarter as shoppers returned to normal purchasing habits after lockdowns. Online sales were almost completely behind a 3% supermarket sales boost for the half, meaning in-store sales growth has dragged. The first half of the 2022 financial year has been one of the most challenging halves we've experienced in recent memory, due to the far-reaching impact of the COVID Delta strain, Chief Executive Brad Banducci said. The company also added a run of bad weather and an ongoing drop in tobacco sales to the list of reasons for its revised first half earnings outlook. He said a wet spring and start to summer had reduced outdoor entertaining occasions, echoing comments made by retailer Best and Less in terms of the impact of poor climatic conditions. He said the extra costs incurred by the business are expected to significantly reduce after the holiday season, although supply chain pain may linger if demand remains strong. In terms of the financial blow, Woolies' first half earnings are now set to come in between $1.19 billion and $1.22 billion for the July to December period, compared to $1.31 billion a year ago. Shares in Woolies were at one point on Tuesday trading more than 10.6% down at $36.26, the lowest since May. At its nadir, the company's market capitalization dropped from $45 billion to just over $40 billion. At 12:30 p.m., Woolies was still trading 8.1% lower at $37.27. Cushioning the blow somewhat was news that Woolworths stores were well stocked heading into the key Christmas trading period, although specialty items are quickly flying off the shelves. Our team is working hard to ensure that our customers have access to all they need to make this a special Christmas, he said. Woolies also had better news for its Big W division, with sales momentum improving as stores in New South Wales and Victoria reopened to customers during October. Nonetheless, 4 months of lockdowns and store closures means first half earnings at Big W are still set to plunge compared to last year. A figure of between 20 to 30 million is expected, well down on the 133 for the first half of the 2021 financial year. That's huge. The company's first half results are also include a bonus Christmas payment of 35 to 40 million to its workforce. Let's have a look at the market sentiment. I just captured this from SelfWealth, the share trading platform I used to buy my Australian and now US shares. If you sign up using the referral link below, we each get 5 free share trades, and that helps me with my pocket money investing. Thank you very much to those of you that do. So they're sitting at $37.45, down 7.67 on the day. And I mean, there you go, guys. We can see the amount of volume and the high and the low. I mean, they're a dividend-paying stock, guys. We'll have to see how that goes moving forward. But we can see here who is buying in the community. The top 10, 20, 30, 40, and 50%, while the bottom 50, 40, 30, 20, and 10 are selling. So, people overreacting to this news, perhaps. The 36% are selling and taking profits, and those that are buying are aligning with the target portfolio. And it's sitting just a little bit overvalued here in the range. But look at that plunge, guys. That's a significant move. The predictions are $31.80 for the low, $39.92 for the mean, and $48 for the high. And is that a hold? It's pretty much a hold recommendation. Yeah, it is. There's 76% of the community are bullish, 24% are bearish, and their ESG score is C+, if you pay attention to that. So there we go, guys. Let's have a bit of a talk about this one. What's interesting here is that supply issues are affecting a big Australian company so significantly, at least on the share price. Now, I'm not a Woolies investor. I wish I had bought some shares when they first came out at $3. I think as a kid, I told my parents to do it. They should have listened to me. But, you know, I mean, it's food. It's a staple, guys. It's never going to be that exciting, and there's always going to be demand. What do you reckon? Do you think Woolies is a buy now, or do you want to wait and see, or do you think some bad news could tumble it a bit more? Or are we seeing just how, well, scared the market is right now, guys, with everything that's going on? Let me know your thoughts and opinions below, and let us know if you're a Woolies shareholder, if you're happy with this. Anyway, guys, I want you to check out this video I did about how much would a carton of smokes buy, or how much house would a carton of smokes buy. So next time you're going to Woolies, or maybe, you know, that's why there's tobacco sales are down, because people are buying houses. That could be it. Take care, guys. I'll see you next time.